Guys, right now the Federal Reserve is widely expected to leave interest rates unchanged at the end of its two-day meeting back on January 28th. But even if rates stay the same, there's a growing cloud of political and legal uncertainty hanging over the central bank, and that's what has investors paying close attention. But before I go into the details, if you're new around here, my name is Nima and welcome to the channel. I'm a corporate executive with over 15 years of experience in both sales and finance. My videos break down complex financial concepts to help you on your financial journey, whether you're just starting out or if you're already a seasoned pro. So guys, let's jump into today's topic, which is, will the Feds pause the interest rates? So guys, at its last three meetings, the Fed cut interest rates, bringing the federal funds rates into a range of about 3.5% to 3.75%. Since then, not much has changed in terms of inflation or the labor market. Because of that, most economists don't expect another rate cut this month, especially as some Fed officials have suggested policy is already close to what they consider neutral, meaning it's no longer actively stimulating or slowing the economy. That's why many analysts say that this meeting wasn't really about the decision itself, but about the message instead. Now, Liz Thomas, who's head of investment strategy at SoFi, says the real focus will be on Chair Jerome Powell's commentary. In particular, investors who want to know whether the Fed is still as worried about the labor market as it was last year, or how officials are thinking about inflation risks as legal battles over tariffs continue, and whether Powell addressed the recent geopolitical developments involving places like Venezuela and Greenland actually make a difference. But guys, even small changes in tone can shift market expectations. Now, this meeting also came at a sensitive moment for the Fed institutionally. It's the first meeting since the Supreme Court heard oral arguments in a case involving Fed Governor Lisa Cook. And that's since Powell confirmed that he's under investigation by the Department of Justice. Now, while neither issue directly affects interest rate policy today, they've raised concerns about whether political pressure could begin to influence the central bank's independence, something that markets take very seriously. And adding to that, the uncertainty is that the Fed's leadership transitions as well. Powell's term as chair is set to end in May of 2026 this year, and Treasury Secretary Scott Bessent has said that President Donald Trump's nominee for next chair will be announced very soon. And that has naturally sparked questions about how the Fed's direction could change depending on who's chosen. So guys, the big question becomes, will the Fed cut rates anytime soon? Now, after the Fed's December meeting in 2025, its so-called dot plot, which shows where policymakers expect rates to go, suggested that the bar for additional cuts has risen. The Fed has a dual mandate, which is keeping unemployment low and keeping prices stable. At the last meeting, officials were working with incomplete data because last year's government shutdown delayed key economic reports. At the time, unemployment had ticked up and inflation was running about 3%. This time around, policymakers have more complete data. Inflation, as measured by the Consumer Price Index, came in at about 2.7%, both in November and December of 2025. Meanwhile, the December jobs report showed the unemployment rate had edged slightly lower after reaching a 4-year high in November. That combination supports the idea that the economy is slowing but not breaking. Now, the KBRA chief strategist Van Hesser says that the Fed is getting close to neutral, but didn't expect any rate cut at that meeting. However, he does expect that the Fed's language to reflect that the economy is coming into better balance, which is often a signal that policymakers are comfortably waiting, is expected. But if not now, then when? Now, before I dive into any more details of whether the Fed will pause interest rates, if you're getting any value from this video, I'd really appreciate it if you could smash that like button, leave a comment down below, and subscribe. Your support helps this channel grow, so please show some love by smashing that like button, commenting down below, and subscribing. Alright, so let's go ahead and discuss the next segment. Now, economists are still watching inflation closely, especially because it remains above the Fed's 2% target. At the same time, the economy is expected to get a boost in early 2026 for several sources, including tax refunds tied to the recent legislation, infrastructure spending, and delayed effects of the Fed's earlier rate cuts finally working their way through the system. All of that reduces the urgency for immediate action. Bank of America Global Research summed it up by saying that there's simply no hurry to act. Other economists agree as well. Oxford Economics expects the Fed to cut rates later this year, likely in maybe June or September. Their view is that it would take a clear and meaningful deterioration in the labor market to justify earlier or more aggressive cuts, which they currently see as unlikely. Wells Fargo economists are slightly more optimistic about near-term easing, forecasting 2 quarter-point cuts in both maybe March and June. Even so, they've warned that the risks are increasingly tilted towards fewer cuts or cuts happening later than expected. But beyond interest rates, the Fed itself is also evolving. Trump's public push for lower rates, the Cook case, the investigation into Powell, and the possibility of a new chair have all raised questions about what the Fed might look like in a year from now. Oxford Economics' Michael Pierce says that while the risk is still small, if the administration were to succeed in removing Governor Cook, it could gradually push the committee in a more dovish direction, meaning policymakers might become more inclined to lower rates over time. Thomas, however, notes that the Supreme Court justices appeared skeptical of the administration's arguments in the Cook case. Combined with the expectation that a new chair nomination is coming soon, she believes that some of the uncertainty could be resolved in the near future. But for now, she says that these issues have the potential to threaten the Fed's independence, but nothing has actually changed yet. The DOJ investigation in particular is more of a distraction than a policy driver, and nearly impossible for investors to price in. Powell's term as a chair ends in May, as I mentioned before, though his seat on the board of governors doesn't expire technically until 2028, and he hasn't said whether he plans to stay on. Possible successors being discussed include Kevin Hassett, Kevin Warsh, Christopher Waller, and BlackRock executive Rick Rieder. Now guys, if the next chair isn't already on the board, it would require a vacancy and Senate confirmation, adding yet another layer of uncertainty. But for now, the Fed appears steady, but markets are listening very carefully to every single word. I want to thank you all for watching this video. If you feel that you've learned something today, please go ahead and smash that like button, hit the comments below, and subscribe. I really appreciate you watching this all the way through, and stay tuned for more videos and updates soon.